Good afternoon, everybody. It is 1 o'clock in the afternoon Central Standard Time on this beautiful Thursday, the 9th of August, 2018. And let's go ahead and dive right in. If you were with us yesterday, then I want to pull up the YouTube channel first so I can see questions. All right. Okay. If you remember, yesterday we talked about a few things involving the drawdown and the price action. The pretty swift drive lower, starting. If we go back here, where we were looking at on the 7th in the morning ish, we just started a huge drive down, and then really on yesterday. Not yesterday, but we started the real drive down on the 7th at 2 in the afternoon, followed by 3 o'clock on the 7th, and then at 8th or 7th and from 4 o'clock in the afternoon on Tuesday, we really just drove down lower. And then yesterday, we saw that continuation, and into the afternoon, a couple hours before we were done actually a couple hours before we started the 1 o'clock session here, we saw a bottoming of these prices, and we started to talk about a couple things. We started to talk about the Gann date of August 8th and why that was important, and we also talked about the day counts, and that's kind of been going on now for a while. We've been discussing that in our forex markets in the mornings on Forex Lens, and in general, that has just been the moves that we've been looking at. So I want to take a quick look at, let's look at Bitcoin. And let's look at the daily chart. And I want to scroll out here, and we can see that we have 192 days. That's where this is at. And then we go forward. And look how many days we are in this trend. Because we got to the 234th day of our downtrend. That's quite a while. And so the 234, so we're getting close to that 240 day, but we're also really we're in between the 225 and 240 day cycles. The 225 is actually a pretty responsive one for Bitcoin. If I remember correctly, 225 is... No, not 225. I'm sorry. The 135 was. Yes, that was near market top. So the 135 day cycle. And now we're at that low. Because he said it could be... So the 225 day cycle, which we are in, is just like the 120 day cycle, or sorry, the 135 cycle. And Gann wrote that it can be the last high, or more typically a lower high or a lower low, which ends a topping or a bottoming pattern. Now, we did not get a lower low, but we found a higher low, which is normal, and that ends a bottoming pattern. Okay, fast moves can start. That's what he said, and can go from lower to lower, high to higher if there's a continuation trend. But it said that sudden moves can start. We had a pretty sudden move. Talked about this yesterday, where we could experience something called a relief rally, and definitely I think that's what we're experiencing right now. Now, relief rallies are generally not sustainable. However, if we look at the volume and the structure, there's been quite a bit of volume that has been coming in, and we've got these a pretty nice double bottom on the hourly here. We've returned back into the linear regression channel. We'll see if this holds. We will definitely have to see if this holds. That's an area of importance. But more than that, I mean, if we look at Bitcoin is doing pretty well, and if we look at a list of altcoins, sort them by performance, there is BCY is up 110%, followed by Ignis at 35%. If we scroll down the list of these cryptos, we see, yes, there are some in the red, but not a lot. Compared to the altcoins that are in the green, we are well into the green. So this is a good sign. So we had a broad market bottom formed this week, and now we have, instead of a rotation of money going into the majors like Litecoin, Ethereum, and Bitcoin, we actually have traders exposing. This is the most speculative market on the planet, and the only thing more speculative than Bitcoin is the altcoin market. And so, or maybe Venezuelan debt, sovereign debt, maybe that is the most speculative market on the planet. But believe it or not, there are companies, private funds in the United States that actually are in the business of lending to sovereign nations. Like, it's weird, but it's not weird, but I mean, it's weird to me. Anyways, so the markets that we're looking at that are catching the biggest rise here is the altcoin market. So that means that a large group of people and a large portion of the participants in this market have decided that this is a good buying time for a lot of these altcoins. Okay, so that's a good thing. And then what's really strong about that is we've had significant strength moving in the altcoins, and yet Bitcoin is actually up 3% on the day right now. That's a healthy sign. We'll see if it's a sustainable sign. That is yet to be determined, but that is a healthy sign. We are in a pretty good support zone. I mean, when we were discussing yesterday, if you remember, we talked about this entire price area down here. So we said that the low was probably in yesterday when we started talking, because we've got that 886 Fibonacci level. In addition to, we've got this mid harmonic level here. This is the middle price range between two major harmonic price ranges. Again, if you hear a little hammering or stuff, that's because the contractors are back again today. And I don't think it'll be as bad as Monday. So we have that going on here. We'll see, this afternoon, pretty much after 1 o'clock, sometimes things stagnate a lot. And it's a good time to kind of do a review of what's been going on throughout the day on the intraday. So what we really want to look for is prices to hold within this channel here. We want them to hold this drive up. Excuse me. Some of the other altcoins. Now, I was talking about yesterday as well, we were talking about the Coinbase 5, as I call them. That's Cardano, Basic Attention Token, Stellar Lumens, Zcash, and 0x. Those have had a pretty nice rise. So, we've been above 10% on Basic Attention, Stellar Lumens, and Cardano for the day. So that is a pretty nice thing to watch. In fact, if we look at the daily chart, I mean, we have an inside bar forming, and sometimes inside bars are a good indication of a possible change in a market. So we have an inside bar, and in a bottoming zone, we've had a new low for the year found in Cardano, and the volume is pretty good. I mean, it's not as high as yesterday yet, but it is still really nice volume. We've actually been showing an uptrend of volume ever since the 5th of August. So that is something to keep an eye on. As we transition here to Basic Attention Token, the volume is not as heavy. And Stellar Lumens, the volume is comparable ratios to Cardano. Now, if you remember yesterday, we talked about the relative rotation graph and how that is kind of a heads-up signal for what instruments are doing relative to where they're at. And right now, if we look at these levels, we compare them to what we were talking about yesterday, we did say that we would see some of these just kind of point down and start to slope down, and that our biggest gainers as we're looking forward should be Stellar Lumens, and Cardano. Those should be the two biggest movers on this chart. So the trade is definitely favoring longs in Stellar Lumens and Cardano, and obviously, watching Ethereum Classic. It shockingly has not. I don't know why this hasn't pointed it down, because it certainly should have, but probably it didn't, because it was still outperforming all of these guys. So we'll have to see. We'll watch. I don't know what it would say if we were doing this against the dollar. How does this look? Oh yeah, they are all against the dollar. These are all doing pretty rough. This is it's a pretty big drive down, which I like this view because this kind of lets us know if there is actually any outperformers against the dollar in their dollar pairs. But what most of the time, because everything is so correlated to the dollar anyways, we're going to mostly want to be looking at a price weighted average where we're comparing the performance of a particular crypto against the broader crypto market. So this is hopefully market analysts will get better data for cryptos, but this is what we've got so far. End of day data for a limited amount of coins. Its competitors are out competing them as far as the data is concerned. So, all right, we've got that going on. Again, we'll see how strong of conviction we have for the bulls here with these pairs. And we are coming off some lows in our oscillators on the daily chart. We're still very extended on the weeklies. So, this rotation that we're experiencing is fairly normal. What we want to be looking out for is the August-October trade in Bitcoin. Okay, that's what we're mostly looking for. We are looking for a strong rise in value between now and October. And then certainly in October, we should see those prices continue, at least until we get into the later December, January, February. So it's really exciting, again, that we found these lows in the market, and either that price came down to new lows or that price came down to the lows of the year. So that is pretty awesome. Again, and when we were discussing the moon phases, the lunar phases, yesterday we were 3 days from a new moon phase, and August 8th just happened to fall on that date. And I mentioned the Murray system as well yesterday, that there was a midpoint found in the Murray system for pretty much all the Forex pairs you can think of. The New Zealand dollar just got hammered with its news last night. It's a pretty cool drop. Anyways, in the Murray system, we see a pretty standard drop here. And what I liked about this chart was the bottom of the diamond showing a strong support zone. So this chart you're looking at is called the Murray math system. I don't remember the guy's first name, but his name is Murray. He created it in the 90s, and what it is, I don't know if he still sells it. I think you can find it. It was a proprietary piece of software, and Murray took Gann's work and simplified it and made it very static. So instead of you placing time cycles on specific like highs or lows, like the law of vibration, you always start at a certain date of the year, and you plot out the time cycles. So there's either 64, 32, or 16 day cycles, and commodities like a lot of commodities like the 64-day cycle, and cryptocurrencies like the 64-day cycle. So that is what we're looking at here. This is a 64-day cycle, and so the black vertical line that we're sitting at represents the end and start of a new 64-day cycle, and that is right where we found our bottom was at the beginning of this. So, and we found price finding support at a middle harmonic range. So there's just a lot of, which was also the support angle in this lattice structure, the dark diagonal lines you see crisscrossing across the screen. Some people call it a Gann grid, which is not the most right way to say it, but yeah. So Bitcoin structurally has had a pretty nice form here, and this is saying to me that we have a strong condition for moving higher. We have to look at the dollar index because it is near a breakout level. It's near a very strong resistance zone, and it's near breakout zone. It looks like it's forming a cup and handle. We could see a breakout. That's very, very iffy if that's going to happen. There's a lot of bias to the downside. So, you know, during this whole week, during the Forex sessions that I do in the morning, we have not put in a lot of trades. We put in a few trade ideas, a few dead cat bounces. The pound trade worked out well for us on the dead cat bounce, and then because we rate the dead cat bounce according to the distance of the Ichimoku system. Again, if this is your first time watching, in the Ichimoku system, that red line is the baseline, and it kind of acts as an ATR. It also acts kind of like a VWAP, volume weighted at price line, moving average. It also acts as the 50% Fibonacci level. So Goichi Hosada, who created the Ichimoku system, whether he knew it or not, he was creating a system that implemented a lot of the same things that Western technical analysts did, and you know, it's just a different way to look at it. So that dead cat bounce on the pound that we took yesterday worked out just because it was so far away from that baseline. And again, like, let's say this is the baseline and this is price. The farther it gets away from it, think of a rubber band being attached, and it'll snap back up to it really fast. So, you know, that is up or down, you know, depending where it was trading. So that is something that we have to look out for. So the dollar index is at a pretty touch and go level here, where we could experience a large breakout, or we could experience a strong sell-off with a multiple top resistant zone. We'll see though. Generally, when you see things kind of inching up like this, it's telling us that it is going to break out higher. We'll just have to watch out and see if that is the case. But getting back to Bitcoin, where do we go here? That is entirely up to the cycle here. So we get a moon phase popping up here on the 11th. So on Saturday. And if we use the Ichimoku system, if you're familiar with it, is anybody watching this not familiar? Anybody who's watching it live right now, anybody not familiar with the Ichimoku system? It's fine if you're not. I mean, out of all the things that seem like something everybody knows or uses, and out of all the things that are in technical analysis, the Ichimoku system is actually a relatively new system in Western for Western traders and Western analysts. It didn't get super popular until the 2000s. So if you don't know the Ichimoku system, that's perfectly fine, because there's actually quite a few veteran traders out there who are really unfamiliar with it as well, because they just don't, you know. Okay. Thanks for speaking up, Tim. Ichimoku system is a we'll do a quick little rundown. It is a phenomenal system. It implements a whole lot of things, and it's an indicator, but it's really not an indicator. On most software platforms now, the Ichimoku system is available for free, which is crazy. But it's listed as an indicator, but it is actually a trading system. And I like to change the colors of these because all right. So when we're looking at this, there's some components we got to make sure we identify. So there's the cloud, which are these blobs. That's probably what the Ichimoku system is most well known for. And then we have all these moving averages. So the first two averages that we see that we want to look at is this blue and this red line. And those are called the Tenkan-sen or the Kijun-sen. The TradingView calls them the conversion line, which is the blue line, and the baseline, which is the red line. The blue line is a 9-period average, and the red line is a 26-period average. And this is not a regular moving average where it calculates the close. It calculates the high and the low. So the average. So for the blue line, it takes the past 9-period highs and lows and then divides it by 2. And that's how this line is plotted. Same one with the red one. It takes the last 26 periods and takes the high and the low and divides it by 2, and then it just takes the average of the prices, the mid of the prices over the last period. So that's what we get here. And the cross under is called a TK cross. Those are not important. They're not important to the trading system. Some people swear by them. I'm going to tell you that they happen so frequently that you shouldn't worry about them. They should just be a thing that you notice, because when the cross does happen, it is sometimes an early warning signal that there may be a change. But anyways, so that is the red and the blue line. And then the cloud, oops. Let's get rid of the lagging span. Then let's hide the price. The cloud is just the conversion line and the baseline moved forward 52 periods or 26 periods. 52 periods. No, 26. Why can't I remember? Oh yeah, 26 periods. I should know that off the top of my head. I use the Ichimoku system a lot. And all this is that, in the default settings, it actually colors these lines there, because there's two other lines. They're called the lead 1, lead 2, or they're called Senko span A and Senko span B. But really, all it is, it's these lines thrust forward 26 periods, and then the colors come from, depending where the lines are. So if the blue line is above the red line, it turns green. If the blue line is below the red line, the space in between is turned red. And what we really want to new moon, 11th of August, all together with the solar eclipse. Yes, solar eclipse. Good for you. Yeah, it's a partial eclipse, I think, right? Can't remember off the top of my head. I'd have to look on my notes. So we have when the Tenkan-sen greater than the Kijun-sen, when it's moved forward 26 periods, it colors it green, and so forth. So the cloud itself acts as a source of resistance and support. So if price is trading above the cloud, the top of the cloud is a support zone. If price is trading below the cloud, then we look at the bottom of the cloud as a resistance zone. So what we really want to know is, here's the thing about the Ichimoku system. I think where its greatest strength is it doesn't tell us, it tells us when to take a trade, but more importantly, it tells us when not to take a trade. And so whenever price is inside the cloud, we don't trade it. We do not trade the We do not input trades when price is trading inside the cloud. All right. Now, the second thing we got to look at is the lagging span. And the lagging span, oh man, the lagging span is like the bread and that is the, I don't want to say it's the bread and butter, but the lagging span is the trigger key. It is the thing that we have to wait for in order to take a trade. And so let me get rid of all that. And the lagging span is just the current price action. So we're looking at candlestick chart right now. If we were to change this to a line chart, oops, you can see that the lagging span is just this, and it's moved back 52 periods. And so for the lagging span, what you'll notice is that the lagging span itself often responds to the cloud just like the actual price action would. So let's bring this back to candlesticks, and let's I'm trying to find an example of something that we could use. Well, we'll find one. But the lagging span tells us when to take a trade after it breaks out of the cloud. So let's just put this all together for a second. And let's go over really quick how you trade this system is fairly simple. So let's go to a daily chart as an example, and let's look at Bitcoin's chart. So again, when price is inside the cloud, we don't take a trade. So if we look at the price action here, we don't take a trade. We don't go long, we don't go short, we wait. What do we wait for? Well, a couple things. Let's do a market replay. And so we can kind of fake that we're watching this live. This is I don't know if market replay is free in TradingView or not, or if you have to, if it's only available for paid versions, but market replay is probably, I gotta pause this for a second. Market replay, if you're new to trading, is probably one of the biggest tools in your toolbox, okay? Because you can practice your system, your trading with with past price data, and learn so much more easily. Like if you have time on the weekends and you want to practice trading, but the markets aren't open, except Bitcoin's open, but sometimes it doesn't. You know, sometimes cryptos don't move much on the weekends, even though they do move quite a bit. But anyways, market replay, fantastic tool to use. So we see prices in the cloud. We don't take a trade. We have to wait for price to get out of the cloud first. So once price exits the cloud, that's when we start to notice something here. So price left the cloud, but do we take a short yet? The rules for taking a short are that price has to be below the cloud ahead should be red, or the span B should be below span A, or span A should be below span B, and the lagging span should be below the cloud too. The lagging span is not yet below the cloud. It's actually still above it. Okay, so we got to wait. And so we're seeing prices do their thing. It's a good thing we waited, because you know we still don't see all the conditions met for taking a short. Okay, until now. Now we have all the conditions met. Lagging span is below the cloud. Price is below the cloud ahead is red. We have all the conditions met on the daily for taking a short. And then what do? We just ride this until something tells us that we shouldn't take this trade anymore. Now notice as price is moving up, when it comes back to the baseline, you'll often see prices face some rejection and selling here. And watch the lagging span as well. The lagging span is getting rejected by the blue line. And price is also facing resistance up against the cloud. Well, it was. And this is where we would be considering taking profit. I should have said that earlier. When we start to see the cross over here, if we see the cross above the conversion over the base, and pause. And right now, again, we're looking at Bitcoin, and we have another short signal. Where's that short signal? Actually, we got to wait for the cloud to turn. Waiting. Oh, see? Got to wait for all those conditions to be met. It really keeps you out of trades. That's what's so great about the Ichimoku system. It keeps you out of trades. Keeps you out of bad trades. Now all the signals are met. Lagging span below the lagging span in a short trade, this line, this black line, needs to always be below the price action. It cannot be inside of it. So price is below the cloud, check. Cloud ahead is red, check. Lagging span is below price and the cloud, check. That is a short entry. You would take that short. You'd hang on to the short because there's no signal telling you that you shouldn't yet. And we're waiting and we're waiting and we're waiting. And we're still short. We may be entertaining exiting that short. Not yet. Oh, I wasn't talking there. I was saying that's the short exit. Okay? The inverse of that on the Ichimoku is taking long trades. And for long trades, let's look further back. That's not a very good one. Let's look at something unrelated, the euro. So for a long trade, the rules are, and this is the same rule applies for any and every market. See, we don't have a long signal yet. Price is trading inside the cloud, lagging spans below the cloud. So for a long trade, we want the cloud ahead to be green. We want price to be above the cloud, and we want the lagging span to be above the cloud. Now that was our signal to take a long trade. Okay? See how prices want to pull back to that baseline? Baseline ends up... frequently the baseline will act as a support zone or resistance zone. And the conversion line can as well. But again, we hang on to that long signal that we took. We hang on to that long trade until there's a couple things. So depending on the market you trade, you can get the best profit target more than likely by, like for the euro at least, on a 4-hour chart. If I notice that the price action is 100 pips away from the baseline, I take profit because almost always price pulls back because it's way too extended. Okay? Okay, let's bring it back to Bitcoin. So Ichimoku system, it's a wonderful system, especially for trending markets. And Ichimoku system sucks in ranging markets, which is what we've been in for quite some time. But if you use the Ichimoku system on like a 1 hour or 4-hour time period, you can get some trades in. But what I also, yesterday again we talked a lot about buying the dip. That buying the dip has worked out pretty nicely. We're facing a little bit of selling pressure currently, like in Cardano. No, we're not. Never mind. I was looking at the BTC pair. A lot of strength behind this right now. So on the hourly, let's look at Cardano here on the hourly. So if we were short, we would be probably exiting that short when either the lagging span started to get inside the candlesticks or when we saw the crossover of the conversion line above the baseline. And so right now we are outside of the cloud. The cloud ahead is going to eventually turn green because this crossover happened. So we should observe the cloud turning green at some point, and then we wait for the lagging span. So on the hourly, really the conditions that we're going to have met before the lagging span were to break out, we just kind of take a little date range here, we'll come over here, and if I slide this over, this is kind of telling us that this is the price value area we would actually right above here. So if we are not long in Cardano yet, we'd have to wait a day and 2 hours just for price to drift above the cloud. Now it could move up higher, so The buy zone could be up by 1322, or it could be, tomorrow plus 2 hours before we get to go long. But if we want to wait for a confirmation on the Ichimoku system on the hourly chart, then we are waiting until price moves way higher, which would be too extended because it would pull back. So the buy entry on the hourly is more than likely waited out. We just want to wait it out. Okay. And now the other thing that it's in our description here is we want to talk about Renko charts. Now, I know a lot of folks, they look at these candlesticks, and it's very frustrating because I think a lot of new traders, they look at candlesticks and they really get confused by them. They have a hard time reading them, or they put too much emphasis on the candlesticks themselves instead of just the actual price action and the trend. So if you have difficulty looking at crypto charts, if you have difficulty looking at candlesticks, or if candlesticks stress you out because they move up so fast or they move down so fast and you're getting a lot of anxiety, I know we've discussed this before, probably 2-3 weeks ago. I want to bring it up again. Renko charts might be the thing for you. And what the heck did they... Okay, so I want to go to ATR. No, I don't want to go to ATR. Bitcoin. And not that. There we go. Okay. Now, again, candlesticks, stressful for you, then you may really like Renko charts because they don't involve time. Time is not a factor in Renko charts. There are no hourly closes. There are no daily closes. There are no minute closes. There is just a price. And so a Renko brick is worth a certain amount of movement. So I said 250. So each brick here represents $250 worth of movement. So red bricks are bearish. So a brick that moves down $250 will form a brick. So we go, like for this brick I'm hovering over, we opened at 7,500 and we closed at 7,250. The next one opened at 7,250 and it closed and it completes at 7,000. Okay, so you can see how this plays out, just goes down. So what we want to notice in a Renko chart is when the color changes. So when we go from red to green or green to red, that's something we want to take a note of, because some people might say, well, how far does it have to move to form a green brick? Because, okay, well, it looks like it just has to move $250, right? No. Here's the power of the Renko charts, because there's quite a bit of reversal that happens to form a different colored brick. So let's look at the current price action. All right, so here's the current Renko brick that we're sitting at. So it opened at 6,500 and then price traded down all the way to 6,250. For a green brick to form, it has to travel $250 up. So it has to come from 6,250 all the way to 6,500, and then it has to travel another 250 to 6,750. So to go from the red brick to a green brick, there's actually $500 worth of movement that has to happen. And so in a lot of markets, when you see that change happen, if you are using a large enough brick size, the change is pretty significant. So if you look at the chart here, even if you don't like to short cryptos, let's say you're not comfortable using Kraken or Poloniex, or you're not comfortable using Bitfinex, or you can't trade on some of the non-US exchanges where they allow you to trade those bogus futures, which is, there's something inherently wrong with those kinds of things. Let's say you can only take long trades. Then if you look at this chart, if you look at the Renko system, or the Renko chart, the Renko bricks, even in a very strong bear market, there are great trading opportunities with the Renko charts. All right, because even when there is a change in a trend, even a corrective move or a corrective motive wave where we do trade up for a little while, there is substantial movement in a lot of these moves. There are very few false moves on a Renko chart. Well, at least if you have like 250, I have found for myself, 250 seems to be the sweet spot. You can make your bricks smaller where you're going to have more signals, but they're not always going to be accurate. You're going to have a lot of whipsaws. And if you make them too big, you're going to be sitting for a long time. And 250 for me seems to be the best thing as far as the size of the Renko bricks. And if you're wondering what these wicks are, wicks on Renko bricks, it sounds like a Dr. Seuss book. Those are big deals because the wick tells us, you can think of the wick almost like you do on a candlestick, but the wick tells us how far price traveled in the formation of that brick. So we had, what this is basically telling us right here is that we closed up here at 9,500 and then it started to trade even higher and we got up to 99.16. So we didn't trade. We didn't get to complete a full new brick. Instead, it traveled down. So this is telling us that this was a pretty bearish move. Whenever you see a wick form and it's a different color than the brick previous, look at other indicators and see, is that a good short or a long trade? Because you'll often find that wicks that form right after a different colored brick, there is a strong bias for that change continuing. And a note about time. So because these paint only after a certain amount of movement, you could get 8 bricks in a row that formed within 5 minutes, or you could have a brick that took a whole day to form. So there's no time involved. If that's the kind of person you are, because I really think that Renko bricks are, I think Renko bricks, more people would find success trading using Renko bricks than they would using candlesticks. Additionally, if you have difficulty finding support or resistance, I do not like support or resistance based off of previously traded price levels, but if that's how you like to do it, it's very easy to spot. Where's a top? Well, looks like there's wick here, there's some area here, around here. This looks like a pretty good area to look at as a resistance zone. Where's a good support zone? Clearly there's some type of support zone down in this area. All right. And so if we know that this has been a historic support zone this year, and we form a green Renko brick, what are the odds that price is going to move higher? Pretty good. We form a green Renko brick off of the support zone. There's a pretty good bias that we trade higher. So whenever there's a green brick that forms after 6,500, that is a buy signal. Now, in some software, a lot of software, you don't get Renko bricks. Renko charts don't exist on a lot of software. And then even if they do, they don't let you apply some indicators to them, which is weird. TradingView, though, it does. And I don't know how it does it or why it does it, but TradingView does. And so, by the way, if you use Renko charts, use the 1 minute time frame. And this is just an issue with TradingView, because TradingView, it won't actually paint the brick until the time frame that you're on actually completes. That has nothing to do with how the bricks are calculated. It's just how TradingView's software works. And the default you'll see the bricks be either this teal or this pink. I like to change mine to be the same color, well, around the same color as the close, because otherwise it just makes you, I don't know, it's just something that kind of, at least for me, it seems confusing. But you can use the Ichimoku system with Renko charts on TradingView, which I think is a crazy benefit. And in fact, for this, what I've done, I've actually never gone over this even in the Forex Lens channel, so I'm kind of giving away something for free here. But I actually get rid of the baseline if I'm using the Ichimoku and Renko, because whenever you see price cross above or below the conversion line, you generally have that being a pretty good buy or sell signal. You know, it has a high probability of moving. Actually, I don't even use the lagging span on it. That's right. Just the cloud and the conversion line. Okay. It's a pretty good reference. Or you don't even have to use the conversion line. You could just use the cloud itself for your Renko charts. And the way that you would, oh, that was weird. The way that you would look at this is, okay, well, if price is below the cloud, you probably only want to take short trades. So, you know, you would take a short when the brick changes, and then you would cover your short when it changes color, and then you would wait for it to turn red. I mean, this would be a choppy trade right in here, but, you know, you see a wick form, you would take the short, you would hold that short, you'd take cover here, enter that short again, down here, and then, yeah, you would just kind of ride it. So you could think of trading the Renko bricks in relation to the Ichimoku cloud according to the position of price and the cloud. So only take short trades below the cloud and only take long trades above the cloud. Pretty simple. And if there is a breakout of the cloud on a Renko chart, you have a pretty, you know, you use some other indicators. You're going to find that using things like stochastics, like even the stochastic RSI is going to be a little ridiculous, but it's pretty responsive regardless. You know, if you can tell that when things get to the extreme of the stochastic RSI, they have a tendency to correct pretty quickly. Not all the time. I mean, there's even divergence. If you spot a divergence, like this is a bearish divergence here, because we have a higher high and a lower high. So if you spot divergences like on the stochastic RSI in using Renko charts, that's a good leading indicator. It turns the lagging indicators into leading. You could use the I wonder if the DeMark is pretty effective here or not. Oh wow, that's some crazy bullish divergence. DeMark maybe. Yeah. What about the composite index? Now I'm just kind of curious. Yeah. Composite index over the DeMark any day of the week. So again, yeah, with Renko charts, actually even with candlesticks, I know I've been a while since I've gone over this, but I use the stochastic RSI and the composite index. Composite index is like the RSI version. Well, think of the RSI as Windows 3.0 and think of the composite index as Windows 10. The composite index is created by Constance Brown. She's one of the best technical wizards, contemporary technical wizards. Her stuff is used in the Chartered Market Technicians material. If you have the Chartered Market Technicians Association, that's a certification that you get for completing all 3 levels. And it's technical analysis. So if that you don't have to have any prior school to do it. You just you either know how to do it or you don't. And actually, if you complete your CMT, you get to skip. I think it's the Series 6. You don't have to do the Series 6. Can't remember, but it's a pretty awesome. Indicator, and Constance Brown's pretty awesome. So one of the things that I like to do, it's really effective in Renko. It's pretty effective in regular candlesticks, but we're looking at a slower and a faster oscillator. So what we want to look for is similar peaks and troughs in these indicators. So, okay, we have a high peak in the stochastic RSI. We have a high peak in the composite index. We have a trough. We have trough and trough. We have peak and peak. No. Well, maybe we'll say peak and a peak. And so far, there's a deep trough here, trough, and peak. And then just bring them back down. And we can look, okay, was there responsive selling when prices were at these elevated levels in both of these oscillators? Sure. Not a whole lot, but there was some. Was there responsive buying when both oscillators were at these extreme low levels? Yeah. Not a whole lot. Was there responsive buying from this trough and this trough? Hell yeah, there was. Yeah, it was when we hit a yearly low. Was there responsive selling from these levels? Not really. In fact, we have this bearish divergence form here. Was there selling at this level where we were at this elevated level in the stochastic RSI and the composite index? Yep, there was responsive selling. Was there responsive buying over here? Yeah, there was. Was there responsive selling going on here? Sure. So, looking at all of that, this is kind of, trading should be easy. Trading is extremely difficult. Okay, I should say that. Your method shouldn't be overly difficult. Trading is 90% psychology and your emotion. You lose money not because of your analysis, but because of your panic. That's why you lose. I don't often spend enough time talking about that with folks, and I know that in general that's not talked about a lot, but we lose money not because our analysis failed us. It's because we trade with fear, and we lose track of what our plan is, or we don't have a plan, or we just enter trades randomly, or we think something looks good so we take it. That's why we lose money. Renko, if you can, it's really easy to say be objective, but that's impossible to do when you're trading money. If you look at this, we just looked at a year's worth. Well, ever since January, basically, we were looking at this. You can make money doing this. Use a Renko chart for Bitcoin, $250 size bricks. When you see that the stochastic RSI and the composite index are both at an extreme high in their oscillator levels or an extreme low, let's take this one first. Let's say we're at this extreme low, and I say, okay, oh gosh, we've been in a downtrend for a while here, but we're at an extreme low in the stochastic RSI, and we're at a pretty deep low in the composite index. And then when I see a new brick form, I know that that's my long signal, because then these guys start to slope up. All right? that would be my long signal. Okay, and that's what you do. You just have to. Yeah, I mean, this isn't a fun day trade. This isn't you know, you're not going to be trading like you're at an arcade, but it will make you money. I mean, are you trading because it's exciting, or are you trading to make money? Because trading because you think it's exciting is the best way to. I think it's the best way to start losing a lot of money. Okay, trading is exciting, but if you can't learn how to take profit or learn how to exit trades quickly, you won't last very long. But I think this is a very simple, easy way to trade. It's not as much of a headache. I think this system. This is one of the things I used to get profit. I learned how to use the Ichimoku system. That got me profitable with candlesticks, but I still hated them. And then I learned to use Renko charts, and I love that a lot more. And then I transitioned back to candlesticks because I got more experience and I had to know a lot about them when I took the CMT material. You know, I really encourage you to give Renko charts a try. And you can. I'll go over this real quick. So how did I get to 250? Well, let's look at Litecoin. Okay, so obviously a 250 count on Litecoin is not going to work because it's worth 63.50. So I need to figure out, okay, what is the way to do it? So I have Renko chart. Nothing's on here. I right click on the screen. I go to properties. This is recorded, so you can come back and watch this. I'll change this to ATR. Now, ATR will automatically adjust constantly. This value here, 0.02, that'll automatically adjust all the time. That's not what we want. We actually want to see this on the ATR on a 4-hour chart. It says 1.84. I'm going to tell you that that's too small. So I'm going to go back to the 1 minute. For me, for me, go back to traditional. $5 moves in Litecoin seem to be the moves to monitor. All right. Ethereum, it's actually $10. Now, Ethereum, looking at this is what I'm talking about when I was talking about the default settings, which show this as teal. It would look like that. That's telling you that that's the projected, that we're projecting higher prices. But don't change those colors because it'll fool you too much. So I just change it to green. And now Ethereum, if we put into practice what we did just a second ago with Bitcoin's chart, if we were to put those horizontal bars on all these extreme levels here, that is what we're at right now in Ethereum. In fact, we have a flat planing RSI in a Renko chart, and that does not happen often. And when it does, there's a lot of response off of it. So we are at an extreme low. We're at the lowest that you can get in the stochastic RSI in a Renko chart, and we are at a very, very extreme low. This is one of the lowest lows that we've ever had on the composite index on a Renko chart for Ethereum. This is a screaming buy setup right now. And you know what? You don't even have to risk a lot. Okay? It's a $10 move. I'd be comfortable taking along here at 62.85. Let's just say ATHSD Renko chart. Long at, what is that? What did I say? We are at, Ethereum. 363.10. So long at 363.10. Extreme. So based off of those these extreme levels, this price down here, if we close a brick, and we would be at 370. Boom, that's a buy signal right there. 370 would be your, if you want to wait for the brick to form, that would be your buy entry. And again, you just sit here and wait, because I tell you what, would you rather look at this? Okay, would you rather look at that, or would you rather look at that? Let's bring it to an hourly, because that's probably something. Candlestick chart price movement versus that. You know what? One of these charts looks easier to read than the other. Candlesticks for a lot of people are a stressful headache of a mess, and I'm thoroughly convinced that the reason candlesticks became the de facto way to learn how to trade is to cause retail traders a lot of anxiety so that they leave their positions. I swear that has got to be the only reason, because nobody in their right mind would study charts. Before you learn about anything else, you learn about the different ways to read a chart, whether it's Kage lines, point and figure is the best. Hands down. Point and figure is awesome. Point and figure, Renko, Gann swing charts, range charts, volume-based charts. You know, if you look at all of them, the last thing somebody would ever put on their list if they're new to trading is candlesticks. Oh my God, Japanese candlesticks. Nobody would, in their right mind, would pick those as the things they would prefer to trade. But a lot of people would look at this and say, Renko's pretty damn easy to learn. It's less stressful. It's less noisy. It's smoother. Why not? You know, you're not going to be taking your trade every 5 minutes or every hour, maybe even every day. But it'll keep you in some trades and you'll catch some nice runs. And that's the point. Anyways, it's 2:02. My time is up. Again, thank you for coming, Forex Lens folks. Thanks for watching. If you're watching the recording, thank you for watching that too. Don't forget to like and subscribe. And Forex Lens customers, I will see you tomorrow morning at 7:30 Central. And the rest of you, I will see you tomorrow back here at 1 p.m. Central Standard Time. Have a great rest of your trade day. Have a great rest of your trade week if I don't see you. And have a safe weekend. And I'll see you tomorrow. Bye-bye.